And breweries aren't the only ones benefiting from Brazil's economic rebound. So too are retailers. Retail sales in Brazil rose almost 2% from the previous month, above expectations, and are more than double the rate 1 year ago. Brazil's real rallied on that news, and its Bovespa stock index climbed for the second day on rising commodity prices. Joining us right now is Doug Smith. He's chief economist for the Americas over at Standard Chartered Bank. So, Doug, let's talk about Brazil. Where are we in terms of their economy?
Well, we're pretty positive on Brazil, in fact, and we think it's going to be the first country in Latin America to come out of the world slowdown. For a while, we've been looking for positive growth this year. We expect 0.6%, which is a bit more than consensus. And the central bank has been aggressive in cutting rates. The federal government has been injecting cash into the economy and coming up with incentives to buy cars and durable goods. And this was quite a change from some years ago, where Brazil would be hurt considerably by the financial crunch. This time they have a lot more flexibility in order to have pro-cyclical measures in order to keep the economy going during these times.
Why does Brazil come out of this first? Why do you think Brazil leads out of this recession?
Well, there's a few reasons. Number one, Brazil's banks were not really caught up in the toxic asset program. So there was some pullback in lending in the fall, but it quickly came back to the economy. And the government-owned banks also injected liquidity and provided home loans, auto loans, things like that. So that's one reason. Number two, Brazil is an enormous commodity exporter, and they have a very wide base of trade. China, in fact, is the #1 destination for Brazil's exports, and we see China's numbers are quite strong. And thirdly, you have, like I said, government spending and a credible, proactive government that has been able to, use policy in order to give the economy a boost when it needs it.
Doug, let's talk about that aggressive rate policy. They've had massive rate cuts. Will that continue in your view?
No. We think that the central bank is finished where it is now at 8.25%. And that, in fact, we think things are heating up pretty quickly, and that by the end of the first quarter of next year, we'll start to see rate hikes. This is also a bit different from the market, but when you look at inflation in Brazil, it's very sticky. It has fallen a bit, but it is still only at the central bank's, the middle of their inflation target of 4.5%. Whereas in other places in Latin America, say Chile, you actually have deflationary numbers now. Brazil, inflation is very slow to fall, and we think pretty quick to rise.
Don't you think, Doug, I mean, if they're about to raise interest rates and you're already looking at an inflationary situation, I mean, isn't it the wrong time to get in as far as an investor on the ground?
Well, it depends. For one, it's common to argue that because industrial production in Brazil had fallen so much, people want to receive local interest rates because they think the curve is too steep. We disagree with that view. However, with domestic demand so strong, we think that there are ample other opportunities. We see the currency ending this year about 180, which we're almost there, in fact. But the end of next year, we have a 155. So there are currency plays. And like I say, the banks are not affected by much of what's going on in the U.S. and in toxic assets, and as the economy is growing, unemployment's falling, there are more and more people that are coming into the banking sector. I use that as one example of a popular play. But Brazil's banks are incredibly profitable.
All right, Deb, so you cover the Americas, the region. So after Brazil, then who, in terms of the Latin American countries?
I think Peru is in good shape to come out of the slowdown this year for similar reasons than Brazil. Very credible policy, the ability to spend money and cut interest rates to boost the economy. And, a considerable export base, largely geared toward Asia, which is a big boost on the commodity side. And I think Chile as well. But Chile, the economy swings pretty wildly up and down because it's so open compared to, say, Peru or Brazil. But nevertheless, for similar reasons, so Brazil, Peru, and Chile we like as the top 3 countries to come out of the slowdown.
Let me ask you, we just talked to a guest on set, James Cordier. He's an options trader, trades options on commodities. He thinks the bottom will fall out as far as the optimism that's driven commodities prices so high. Doesn't that kill Chile, Peru, Brazil? I mean, aren't these economies really based on the commodities as well as the markets?
Well, yes yes and no. Brazil growth is driven by domestic factors. Now, mining and things are part of that, but consumption is a large part of what drives Brazil. The high commodity prices help them on the trade side, so it gives them a trade surplus, which allows them to build reserves and lower vulnerabilities. But they don't have net trade does not have a positive contribution to Brazil's growth because they also import a lot. So
but how much of the Bovespa is made up of commodities producers?
A considerable amount.
More than half.
Yes, that's right.
So that has to be, I mean, I'm not saying this is going to happen, that we'll see commodities prices come down, but if commodities prices tank, then South America is in a world of hurt as far as stocks are concerned.
Yes, that's true. And that's the case for virtually all of the stock markets in Latin America except for Mexico. They're heavily commodity-oriented in one form or another. Now, they do have a wide base of commodities, but if the whole commodity complex falls, then they will suffer. I mean, generally speaking, as a bank, we tend to disagree with him, and we're fairly bullish on commodities going forward, not talking about day-to-day swings, but with what we see happening in India, what we see happening in China, these are all, the fundamentals are all quite supportive of commodity prices in a broad sense going forward.
Got it. You'll take the other side of that trade.
Any day.
All right. Hey, Doug, thanks so much for joining us. Doug Smith there, Chief Economist for the Americas at Standard Chartered Bank.